Hey, the markets, tariffs, and what smart investors are doing. It's about 3:10 p.m. Eastern time on April the 4th. And as we sit here right now, the Dow is down just over 2,000 points, which is a redonkulous, a redonkulous amount down. And it's following a day of 1,500 points down the day before. There's a lot going on. What are we doing? Where do we regroup? And making smart decisions. And so, listen, the first thing I'm going to tell you is Warren Buffett's age-old advice that when people are fearful, be greedy. And when people are greedy, be fearful. Right? And this is one of those opportunities. So let's talk market fundamentals. Why does the market go down? The market goes down because there are more people selling than there are people buying. That's how supply and demand works. Okay. So the market goes down because more people are selling than are buying. Okay. Pretty basic. Now, when that reverses, when more people buy than sell, the prices go up. And so one of the first things we want to talk about is self-correcting territory. Like at some point here, the market will drop enough where an average person's going to look at this. The average investor, smart money is going to move first, and then dumb money is going to move second. Okay. But the average investor is going to look at this and say, hey, you know what? This is now on sale. We want to go back in and buy. And so that's how this naturally corrects over time. Okay. So markets go down because more people are selling than are buying. So then the next question is, and a good investor is going to ask the question, well, why are people selling? Why are people selling? What is causing people to want to get rid of their equity positions right now? And there's a number of reasons, but clearly the number one reason is fear around tariffs and a trade war. Fear around tariffs and a trade war. And this fear is largely being propagated by the mainstream media. This is like they're like excited about this. This is good. And, out of their disdain for Trump. Now, you might not agree with that, okay? But when 90+% of the media coverage goes one direction, you'd have to be intellectually dishonest to not look at that and say it's at least a factor. Okay, so you have the media that has a little bit of an agenda and a bias here. We want things to not go well for this person. And so let's clamp on and let's run through what's going on. But let's break down tariffs. Let's break down tariffs and why people would be afraid. What people would be afraid of is sort of like this trade war and an economic slowdown. So let's go in and let's talk about tariffs, okay? So first of all, pretty much every country in the world charges the United States tariffs. So if we want to sell our goods to another country, then those goods get charged a tariff to come into that country, which makes our goods more expensive in that country than the natural goods in that country. And so it's sort of like an economic protection. In other words, we don't want people overseas making things more cheaply than we can make them here and taking our jobs and our money. So here's what's interesting about trade. Okay, let's use country A and country B. So country A sells something to country B. Well, what happens is country B uses their money and sends it to country A for the goods. So it's depatriating their money. Okay, so this is where trade and trade imbalance becomes really, really important, right? So the more people are consuming from you, the more you are exporting, the more of other countries' money is coming in. So we're getting lots of other countries' money in exchange for the things that we're selling. Okay, so we want to sell a lot to other countries because it gives our people work, it gives our people wages, and we send that product somewhere else and we get new money. We get money from there coming here, not just the money here that's circulating. Okay, so that's why people want to export. That's why people want to export. And when we import things, when we consume things from other countries, the reverse is true. So when we buy something made in China, and our money goes to a company in China, we are depatriating our money. We're sending money out of our system and we're putting it in their system, which is really good for them and not so good for us. And so trade balance is where those trading things are essentially equal, right? So about the same amount is coming in as is going out. Now, this is really good. It's good to have fair trade, okay, because that way we can get access to goods and services and labor and other things globally in niches that make things more efficient, less expensive. That's good for everybody. It's bad when it becomes an imbalance. In other words, when we are buying more things from other countries than we are selling to them, what's happening is we're actually losing our wealth. Our wealth is being exported to other countries when we are buying more than we are selling. Pretty simple so far, hopefully, right? Okay, so that's what happens on the tariff. Okay, so we have had very, very large scale trade imbalances for a really long time. In other words, most countries are selling far more to us than they are buying from us. Okay, that's why. Okay, and so part of the reason why that's occurring is these other countries for long periods of time, most of them, not all of them, but most of them have had very large tariffs on our goods. So the reason that we are not selling as much to other countries as we are buying is because our products cost more over there because they're tariffing us than their products cost here. So they can come in here with little to no tariff and compete against American companies and American workers. But when we send over there, we have to be surcharged this tariff, which makes our goods less competitive against their own goods, which is why we have a trade imbalance. We are consuming more as a country than we are sending out, not because we're not competitive, but because of the tariffs on all of our products everywhere in the world. Okay, so this creates a wealth siphon. If you do this long enough, eventually you have no wealth left in your country because your money is going to all the other countries. Okay, so that's essentially what has been going on in the United States for a very long time. If you just Google the trade deficit, and let's go look at it. What is the trade deficit? I'm gonna pull it up right now. Okay, so let's go take a look at this bad boy. Current trade deficit with, let's just go look at Canada. Okay, current trade deficit with Canada. So let's look. Okay, so the United States, this is from AI, Google AI. In February 2025, the United States had a goods trade deficit of $63.3 billion. Okay, that was in 1 month. In 1 month. Okay, in 2024, the U.S. exported that's for the year. So we exported 349 billion, but we bought 412 billion. So we sent them 412, they sent us 349. There's a trade imbalance, right? 60 some billion dollars. That's what the trade imbalance was. Okay. And that imbalance happens because our products are not competitively priced because of the tariffs. Fair enough. Okay. So what Trump is doing is saying, hey, that's not fair. That's not fair. We want an equal playing field. If you want to sell to us, that's fine, but we need to be able to sell to you. You can't make it harder for us to sell to you and expect to continue easily selling to us. That's not going to work. So what they're looking to do is create reciprocal tariffs, which they really haven't done for the most part, right? Like Canada charges X, we're now charging 0.5X or whatever that might be. Okay, so it's not even going all the way. And everybody's throwing a fit over here. Why? Because it suits the narrative. It suits the narrative to throw a fit that this is occurring and how reckless and all these things. But it's just evening the playing field. The second thing that happens here is one of two things. They either start paying us to sell to us, which is good. Our country gets money that it wasn't getting before. Or what is likely going to happen, and I'm going to tell you what's likely going to happen and then why in just a second. What's likely going to happen, what we just saw with Vietnam just a second ago, Vietnam just capitulated and said, we're going to zero tariffs. We're not going to charge you any more tariffs. We don't want tariffs. We're not going to charge you any tariffs. Okay, that's likely what's going to happen. So what's going to happen almost everywhere is instead of these tariffs going into place, which they may go in for periods of time, but instead of them going into place, they're just going to get washed out completely. And the reason they're going to get washed out completely is this. When you live by the sword, you die by the sword. So these countries have been getting rich off of us for a long time by selling to us in trade imbalances. Okay? That's living by the sword. They've been taking what they want. Slice, 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 right? Okay? But here's the problem. Because they sell more to us than we do to them, it affects them more if they can't sell to us versus if we can't sell. For example, people are worried about trade wars and tariff wars. Okay, so follow me on this. If we double the tariff on them and they double it on us, so now both countries have to pay more. But I'm not as dependent on you because I don't sell you as much stuff as you sell to me. So we're both paying more, but I buy less from you. You sell a whole lot to us. We don't sell a whole lot to you. So while it is not good for both countries, the country with the positive trade deficit is the one that is hurt because they have the most to lose. In other words, these countries are far more dependent on us buying from them than we are dependent on them buying from us. That's what the trade deficit, that we have more going to them than they have coming to us. And so we have less risk of tariff wars or trade wars. We benefit from this. Why? Because these other countries have more at stake. Secondly, they also have much smaller economies. So they're getting double hit. They have a much smaller economy and much more is coming to us than is coming from us. So not only are they more dependent on us, but what they are depending on us for is of much higher importance to them. Watch this. Let's go Google this. We're going to go look at this. We're going to go look at, let's use Canada. Okay. American trade as a percentage of Canadian GDP, which would be the gross domestic product. Okay. Let's see if we can get what we're looking for here. Okay. So in 2023, US trade accounted for roughly 19% of Canada's GDP. What does that mean? Nearly 20% of all the money that Canada took in 2023 was selling to the United States, almost 20%. Okay. So let's look at the opposite. Canadian trade as a percentage of US GDP. Okay, let's take a look at this. US GDP. Okay, so let's see here. Why is this not showing what we are looking for? Let's reword this. Apparently Google doesn't like this here. So how much of the US GDP is spent on Canadian trade? And for all my friends in Canada, I love you all. We're good. This is amazing, right? Okay. All right. It is not finding this here. It's interesting. Okay. It says 17% of overall US exports. So this is not the GDP. Yeah. So exports and imports represent 24% of US GDP, but that's both in and out. So the only thing that I can see here, it's so weird, almost like Google doesn't want you to be able to look at this number. Okay. But what we can find is 17% of US exports went to Canada. Okay. So not 17% of US GDP, 17% of what was exported, which is whatever. So it looks like, maybe 30%, 35% of the US GDP is exports. 17% of the 35%, it looks like, is going to Canada. So let's call it 20% of 35%, which would be about 7%. So 19% of Canada's economy is selling to the United States. 7% of the US economy is selling to Canada. Okay, so when there are tariff wars, who's getting hurt more? It's not the US. The US is getting hurt, but it's getting hurt on 7% of its economy. Canada is getting hurt on 19% of its economy. It's getting hurt more than we are. And this is true of every country in the world. It's true of every country in the world. Okay, so ultimately, what's likely going to happen is the U.S. has a bigger economy. The U.S. is less dependent on the exports to those individual countries than they are on exporting to us. So, in other words, these guys are going to sort of run out of fire. It's a pissing match and they run out of pee. Right? They run out of, their bladder isn't as big. They just don't have the war chest, right? So it might hurt for a little while, but ultimately what's going to happen is they're going to bring the tariffs down because they can't afford to have equal tariffs. They can't afford that. They can't pay. They're too dependent on selling to us. They can't have those tariffs. So they're in a weak negotiating position. They have to sell to us. We don't necessarily have to sell to them. Right? And so that's a good positive thing. That's a good positive thing. And likely, it's sort of like mutual destruction. It's unlikely to actually occur in any serious fashion because the power is too weighted on one side. Okay. If that's true, and it likely is because it's just math. If that's true, and the market is afraid of this happening, and that's why they're selling based on a largely irrational fear. And once that fear is deemed to be irrational, then likely the reason that all those things were sold will dissipate and people will rebuy, right? That's likely what happens. Now, there's lots of other reasons people sell stock. They might sell stock of an individual company because that individual company is not performing very well. It's not making as much money. It's not being as well managed. Maybe there's legal challenge, or there's regulatory or some other thing. Like, there's lots of reasons why people want to sell assets, but fear is generally the first and most major reason. Okay. And so we want to understand, is this well-founded fear, or is this sort of worked up fear? And in my opinion, I could be wrong. Okay, I could be wrong. We'll see. We'll see how this ages. We'll come visit this post in 30 days, and we'll see how it ages. But my guess is this is an illegitimate fear. It is a fear that's being mongered in the media to people who have never stopped to think about what tariffs are, how trade imbalances work, and who benefits from those things, right? And so if you're ignorant about those things, it sounds very scary. Sounds very, very scary. But in my opinion, it's not really, it's turbulent right now. It's very turbulent, super turbulent, right? Like today, I don't know, could definitely be towards one of the worst days in the history of the market in terms of at least gross points going down. I don't have that data. We could research it. You could research it. Okay, but I believe this is going to be short-lived. The other thing that's really interesting, right? Like, people also sell for like macroeconomic reasons. Okay, but there's other things that are going on right now that are really positive that you don't see a lot of. Okay, but the private payroll jobs report, really good, stronger than expected. That is a really telltale sign that there's not a recession looming. Companies are hiring people. So the money is still exchanging between consumers and businesses are still hiring people. So the fundamentals, people are not buying things. The fundamentals are not being disrupted right now, at least not right there. So hiring is good in the private sector. That's number one. Number two is interest rates are coming down. Interest rates are coming down. The Treasury note fell super close to 4 yesterday. It might even be sub 4 right now. I'm not looking at it. Okay. So that's really good. That's good for the United States government because it has to pay interest on its debt. When the interest rates are lower, it has to service lower debt payments. It's actually a really good thing for the United States cash flow. It's also really good for borrowers who have adjustable rate loans. It's really good for people that need to refinance, like all the commercial debt that's in trouble right now. It's actually really good for them to have lower interest rates. Lower interest rates mean faster flowing money. High interest rates are used to curb the money supply. Low interest rates let the money supply flow because payments on interest are like junk. There's no benefit from it. You bought something some time ago, so you already bought the thing that was produced, but now you're just paying junk costs because you borrowed money to get it. So it's not, the money's not being used to buy more things. The money's being used to service things that were already bought. And so when interest rates go down, it means less money has to be used like that, which means there's more money left over to buy actual things, which is good. This is good. That's good for the economy. It's not bad for the economy. So private payrolls are going up. Interest rates are coming down. interest rates are coming down. Okay. Those are both really, really fundamentally positive factors. Okay. So you have this sort of like fear mongering going on about trade wars and tariffs, and the United States wins those wars. If they ever exist, they win. Why? Because the economy is too big and it's too diversified. We have no one trade partner that represents a catastrophic blow to us. But we are that trade partner for almost everybody else in the world. If they can't sell to the US with the level of ease that they have been, they're in trouble. And so they talk big games, as they should. That's what their leaders do. Their leaders pound the chest and talk big game and all that. But then they all do what you're seeing them do, which is, yeah, we can talk a big game, but we're going to get whooped in this, and we cannot afford this. We can't afford this. We can't afford the burn rate. Our economy is too small. You're too big of a trading partner. It's going to be too catastrophic. And so they will all come to the table and give us better deals. And when we get better deals, more money comes into our country and stays in our country, which makes the economy even what? Even stronger, right? So I know it's scary out there. So you know, what should I be doing? Number one is get educated, right? Get educated so you don't just blindly follow the masses. Okay. Number one. Number two is we don't invest emotionally, right? We don't. I talked to my investment guy today, and I'm like, hey, dude, I'm good, right? I'm good. I want to make sure that our portfolio is structured to make sure some of our notes are taken care of, but I'm good. Like, I understand what's going on here. I'm good. So let's get educated so we know what we're talking about. Because there's so many people, they love to blab about, oh, there's tariffs and it's irresponsible and all these things. Like, look, I wish there was an easier way to fix this, but these people have been robbing this country for a long time. Okay. And when you turn off people's gravy trains, they generally tend to not be very happy about that. But you know who is happy? The people who don't have to pay the gravy anymore. Those are the people that are happy. And by the way, that's us, you all. If you pay taxes in the United States, that's you. Congratulations. Okay. So the third thing we should be doing is looking for opportunities, looking for buying opportunities. If a trade war is unlikely to be majorly consequential to the United States because of the reasons we just talked about. Okay. And the other fundamental underlying truths about the economy are all pointing in a stable or strong direction, then likely we're just buying at a discount right now. And we love sales. We love sales everywhere except for in the markets. Then we're afraid. We have like reverse psychology. Okay. And so the best way to make money is to buy low and to sell high, not to buy high and sell low, which is what everybody who's selling today is doing. Everybody who's selling today is selling at a loss, generally speaking, at a macro level from where they were before. And that doesn't make any sense unless there's a good reason to take the loss, unless we think, well, there's further loss that's fundamentally sound coming. I'm in Blockbuster Video and videos aren't a thing anymore. And so if I don't sell now at a loss, I may have a much larger loss down the road. That's a fundamental challenge to the underlying asset. Again, what I'm saying here is looking at the evidence, and I'm not an economist, okay? And some of you probably are going to get at me or whatever in the comments, and that's cool. Like, you're entitled to your opinion. Just make sure that you back it up, right? I love people who come and espouse opinions on my posts and then don't back it up and then are like, well, I'm just not going to talk to you about this. Like, I'm not even going to dignify that with facts in a response, right? So like save yourself the hassle of looking like a goon and a goober by coming on here and dropping your uneducated opinions and being unwilling to back them up. I'm not saying that I'm right, but what I am saying is I at least have gotten some education on this, right? And this is what I believe is likely occurring and what I believe we should probably be doing because of that. Time will tell. We'll see, right? We will see. But it's sure going to be a lot of fun. And if you can, again, heed Warren Buffett's advice that when people are fearful, be greedy. And when people are greedy, be fearful. People are fearful right now. It's time to go buy. It's time to go acquire things. It's time to get fundamentally good assets at a discount because people are afraid. Fear is a mechanism to transfer wealth, okay, from the mentally weak to the mentally strong. That's what fear does. Fear is a wealth transfer mechanism that takes money from people who don't have the stomach and gives it to people that do have the stomach. And so let's decide that we're going to be people that do have that stomach today, right? Let's decide that. So again, this is not investment advice. Consult an investment advisor. I'm not soliciting any individual stocks or bonds or making any blanket investment recommendations. But what I am telling you is my opinion on what I think is happening and why I think it's happening. And it'd be wonderful if the media one day just like decided to try to care about the American people instead of rob them blind and cause them to do really crazy things. But hey, thus is the media and the clickbait society that we live in today. And so, hey, you're smarter than that. I'm smarter than that. We're not going to buy into it. I hope this helps. God bless. We will talk to y'all soon.